Good morning, my name is Fabio, and in today's video we're going to be doing a trade breakdown on a EURUSD short on the 4-hour time frame, explained through supply and demand, liquidity and market structure. So hope you enjoy, and let's dive straight in. So starting off with the overall market structure here on EURUSD, if we just draw in this overall trend line, it was clear that at the time we were in a bearish market. We were continuously forming lower lows and lower highs. So over here you can see continuous lower highs, and over here we have continuous lower lows. So the market was clearly trending in towards the downside, and at this time I marked this out as my swing high and this over here as my swing low. The next thing that I like to do is draw in something called a premium versus discount tool. So at this time what I saw as well was that the market had pulled back pretty much exactly in towards this overall premium versus discount level, which is the overall 50% retracement level. So with that confidence that we have a sufficient pullback in towards the highs due to price pulling back in towards that 50% level and the overall trend being heavily bearish, I was already, based on market structure, heavily anticipating on the fact that we were looking for shorts. So next of all, what you want to do is draw in your areas of supply and demand. So for this, what I'm going to be doing is I'm going to be drawing in this area of supply over here in between these two wicks, and these two wicks on the lower time frame, and specifically on the 15-minute time frame, will be a very clear buy before the sell over here. And if we then also look at the 15-minute time frame based on liquidity, and I'm already moving a little bit ahead, is that we have this equal highs over here. So we have these equal highs, or these descending highs, where liquidity is resting above. Furthermore, what you can see is that the market pretty much every single time it takes out a high, retraces in towards the downside. It takes out a high over here, retraces in towards the downside. So what I was looking for was pretty much a short in towards the downside after taking out this third high, pulling back in towards that 4-hour area of supply, and then providing me with a market structure shift, which would make me confident enough to look for that further downside move. So that is also actually straight away liquidity explained for you. And if we just go back in towards the 4-hour time frame, what then becomes very clear is that we had indeed liquidation over here on this high. We had supply, we had a bearish market structure, and we also had that sufficient pullback pretty much based on that premium versus discount tool. Now, the most interesting part is now to come, and that is how did I actually enter that specific trade? So over here, if we look at the 4-hour time frame, what I always want to do is I want to look for a significant enough of a reaction from an area of supply or demand. In this particular situation, the way that I enter the market is by using something called a fractal entry model. So over here, what we had was my fractal high on this bullish candle. Because why is this your fractal high? Well, what you can see is that you get the push up, you get the pullback, and then you get a push up again, meaning that the low of that candle over here, of that bearish candle, becomes your fractal low, because that is the low that took out that high of that bullish candle. So pretty much what we're now seeing is a push in towards the downside and a break of that low over here. And what I'm now looking to do is enter the market upon a pullback to then expect that the overall continuation will play out towards the downside. Because of the fact that we saw that change of character over here specifically, and coming from that area of supply and coming from that overall 50% mark of the overall bearish swing, I was confident that there was a lot of supply within the market over here, because it provided me with a valid reaction, which then triggers a potential entry for myself. And that then, combined with overall market structure and liquidity, makes me confident that I want to enter this market. Now, looking at the overall entry that I want to take, it's pretty much from this final buy before the sell candle over here, which is then my supply zone. So from that moment onwards, what I want to do is I want to set my entry on that supply zone with my stop loss above the high of that area of supply, in the anticipation that we're going to be creating a new potential lower low at the overall swing low. So what we then saw was that the market started to rally in towards the downside. We then came back in towards that area of supply and straight away saw a valid reaction. From that point onward, we started selling off. And then with the news, the market came back up one more time before then really providing us with that valid sell-off in towards the downside. Now, that is the overall 4-hour trade, but there was also a 50-minute trade, which we could have taken. So if we just focus over here on the 50-minute price action, what then becomes again very clear was that we were trending in towards the highs, with higher highs and higher lows. So a higher high, a higher high, a higher high, a higher low, and then again a higher low. We then break structure over here in towards the downside. This then becomes your swing high. This then becomes your swing low. Then if you were to draw in your fib, what happens? The market pulls back exactly in towards that 786 Fibonacci retracement level, which once again has the confluence with this overall area of supply, this buy before the sell candle, and once again liquidity resting above this overall area of consolidation / sideways price action. The market pushes up, grabs the liquidity resting above the highs, and then sells off aggressively in towards the downside. So I hope you guys enjoyed this trade breakdown, and I hope everything is clear. If you have any questions, make sure to join the Discord, link in the description down below, and we'll see you there. Thanks.